you use Rain-X, that won't happen. And then it looks like we got some doors missing on the vanity here. Principal, interest, taxes, and insurance. Our mortgage payment. Let's see what our experts are telling us here. Property manager is going to cost you 10%. Our tenant is taking care of all of these. Cash flow, that's the name of the game. Are you new to real estate, struggling in real estate, maybe a wholesaler, cash buyer, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation investor and realtor with 20 years in the business. This is the weekly deal analysis. Let's get into the show. This week on the show, we are sticking in California, but going a little bit south to Bakersfield, 501 Buckley Avenue to be exact. This is asking $293,000. It's a 3-bedroom, 2-bath home, 1144 square foot. And let's take a look through these pictures and see what we can find. I think it's this one right here on the corner, which this looks like a pretty busy road. And then you got your entrance off of the side street here. Let's blow these things up. Driveways, that just looks wet. Kitchen has been updated, but we got some issues on the ceiling. Pretty good tile work there. Definitely 90s style. A lot of soap scum on the glass, but if you use Rain-X, that won't happen. And then it looks like we got some doors missing on the vanity here. Right. And so here's one bedroom, bathroom, another bedroom, aerial over the house. They got the HVAC on the roof. Really tight. I mean, this is California, so really tight yard space here. Pretty common for the area. I've never been to Bakersfield. If you have, let me know if that's normal. Neighbor, hopefully they're cleaning that up. That's not there all the time. All right, so that's all we're getting out of those pictures. Let's see what the agents tell. 144 days on the market. 3-2 corner lot. Bum, bum, bum. All right, so the agent's not telling us anything. Let's see what else we can find. Built in 91, so we don't have to worry about lead paint. As landlords, 47% renters in the area, median age of 29, and median or average household income of just under 51, which is pretty solid. Big thing that I look for is this amount of renters versus the population size. That way we know what we can rent things for. We're not going to use that calculator. I use Bankrate. Let's see what our experts are telling us here. This is US Bakersfield Metro, Rexland area. I guess that's where this is. And it seems to be right in line with what the experts are saying. Taxes seem pretty low, especially for California. I'm not sure I understand this. So they listed on March 25 for 270 and then raised the price 6 days later by a lot. Not sure I understand that logic, but I've seen it happen before. Let's look at our comparable sales here. We have a 300 sale that took 78 days. Fairly comparable, I guess. Nice 320. That might be AI, or that might just be a beautiful backdrop. I don't know. 320 in 50 days. 315 in 139 days. 350 in 12 days, but that thing looks beautiful. 360 in 35 days. So there is stuff selling in this market in this area. And ultimately, I think our ARV or after repair value is going to be that 300,000. I just don't think it's going to be, I think it needs about 10,000 in work just to get it cleaned up and turned over. Now, before I stick to that 300, I want to look at this one and see where it was located. If it was on a corner street, on a major road. And of course, they're not going to show any more pictures, so I can't really tell. I think we're going to dock this thing down by about $10,000 just for the location. It might be more, it might be less. I don't really know. So we're just going to put a number on it and we're going to stick with that. So we need 10,000 in repairs. Our ARV, we're going to go with 290 or ARV after repair value. After we put that 10,000, we think it will be worth 290. Based on those numbers, I am going to pull out my calculator here. Back to the top. So 290 times 70% minus 10,000 for our renovations. That gives us an offer price of $193,000. We're going to take that and we're going to jump over to the InvestNest and break this thing down for a cash deal. Love this site. I will have links below that will get you 1 week for free and 50% off of your first month. Try it out. Come back to this video. Let me know if you like it or you don't like it. Another thing that this awesome site does is skip tracing, and that is included in the monthly price. So you get 500 included in your monthly price. You can scroll down and pick up all kinds of great information on this stuff. It looks like this guy is an investor as well. 9 properties owned, portfolio worth almost 4 million. I like it. But now they're saying owner occupied. I don't know about that. It's a new feature. I'm still trying to learn all the different things that they have to offer. Again, built in 91, a little over 1,600 square foot. And estimated rents are 1,620, estimated value of 293. And we're throwing 290 on it, so I think we're pretty accurate there. Taxes, I think they're a little higher, so we're going to use this tax amount. Or, hang on here, 2495. 2495, same thing. We're going to stick with those numbers. And here they're even estimating the mortgage balance of 66. So this guy's got some good equity, or should have some good equity. Could be a foreclosure. That would make more sense as to who the buyer is, or the current seller is. Neighborhood market, Richland area, median income, monthly rents on average. I like this. 1620 for a 3-bedroom. That's pretty cool. But these are also really old numbers based on 2023. So to figure out what HUD or Section 8 would pay for something like this, we're going to jump up here and look in this area for 2026, and they're paying almost 2,100 here. Another great site that I love to use is Rentometer, and their numbers are pretty spot on as well. So median 2,150, average 2,196, and this is 2,062. We're just going to stick with this number because it's a little more conservative. Let's jump back to the InvestNest and go break this thing down now. Calculate our returns. We're going to call this 501 Buckley. And our purchase price, we said our 70% of our ARV after repair value minus repairs gives us an offer price of 193. 193,000. Closing costs, we're going to offer to pay both sides, so we'll kick that to 4. Our lender's going to charge us 2 points. That's basically 2% of the loan amount. That's how our lender gets paid. We're going to do $10,000 in repairs, and I do want to try to lump that into my loan amount if I can. 25% down payment, and I would like a 30-year term on that. Rates, we'll just do a solid 7. That's about what they are right now. Rents, I think we're gonna kick this up to just a flat 2,000. Taxes coming in the same. Insurance, I always factor in $125 a month or $1,500 a year. Property manager is going to cost you 10%. Our tenant is taking care of all of these. There is no HOA. Reserve fund. I call it my war chest. That's 5% off the top for repairs and maintenance, vacancy, and capital expenditures. Capital expenditures are the things that need to be fixed. A lot of times you might hear the term deferred maintenance. It's pretty much the same thing as CapEx. So 15% off the top goes into that war chest every single month. And we are real estate investors. We don't pay full commissions. All right, let's see what these numbers look like. You wanted to see if it cash flowed. I know. If you haven't done so already, hit that like button for me and share this with somebody else that will get some value out of it. Boom, cash flow positive. Not a great deal, but 154.13 a month. Not bad. That's going to be for 61.5 out of your pocket. That is pretty bad. Total mortgage and interest, principal and interest is going to be just over that 1,000. Down payment is 57.50. So, I mean, we're putting down a sizable chunk here, 1/4% or a quarter of the loan amount, basically, or the purchase price, rather, sorry. Cap rate, 7.26. Okay, I like to see them somewhere between a 7 to a 9, realistically. DSCR, it's kind of cutting it close, but DSCR stands for Debt Service Coverage Ratio. This is based off of the production of the property. Minimum would be whatever your mortgage payment is, would be that would be the same that you collect in rent. That would be your one equal. Because we're cash flow positive, this one kicks up a little more. For me personally, I like to see a 1.2, 1.25. I'm going for a home run. Realistically, I like to see it 2. You know, who wouldn't? But I don't think I've ever been successful on getting one of those. Cash on cash, pretty low. Return on investment, not bad, just under 12%. If you follow the 1% rule, that does work. And here's all of our breakdowns. So total income from our rent would be 2,000, breaks everything down. One of the things I love about this site is it just breaks all your numbers down and shows you where everything is and isn't. Another great feature that InvestNest offers, cash on cash return. By the time we dump this thing, we're just under 8 at that 10-year mark. And we are right around 6 years before we get all of our original capital back. Not a bad deal. Not a great deal, not a bad deal. But just think also, if you are local and you're going to manage this thing yourself, you're adding another $200 a month to your net cash flow. So that may actually be worth it to you if you're going to self-manage. Now we're going to do my favorite part and break down the cash analysis. So we said our ARV, or after repair value, was going to be not 190, 290, 290,000. And on a creative deal, we're going to get a whole lot closer to that asking price. So based on that, I think we're going to go in at just say 250 and try to offer a 4% interest rate. Now we need to figure out our PITI, or principal, interest, taxes, and insurance, our mortgage payment. All right, our offer price is going to be 250 with 5% down. And we're not worried about the zip code. There's our 4% interest rate. Our taxes are 208. 208. Our insurance is 125. And that makes our total PITI, or principal, interest, taxes, and insurance, 1467 per be 1467. We said our rent potential was 2000. Oof, $33 a month. That's not good. Cash to the sellers at 5% of 12.5. This agent's not doing anything. We'll try to throw 500 bucks. Assignment fee, we are not working with a wholesaler, so we're not having to pay that fee. Closing cost is going to be that same 4%. Renos, we said were 10,000. 2 months of holding is just 2 months of this mortgage payment here. No arrears that we're aware of, and a good TC or transaction coordinator will cost you 1,500 bucks. So for 40 grand out of pocket, you can spend almost 100 years to get all of your money back, making a whopping $33 a month net cash flow. What did you think about Bakersfield? Cash deal, creative deal, go find another property? Drop your comments down below. That's going to do it here for us this week in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll catch you next week.